Hello ladies and gentlemen, welcome back to another episode on this public investment series. As you might know or not if you're new to this channel, every month I record myself investing in my public investment portfolio. Remember, everything that I say in this video is not investment advice. Everything that I do is just according to my own due diligence, according to my own research, and it's adjusted to my risk profiles. Just because an investment might make sense for me, it not might necessarily be the best one for you. Having that said, let's open our Trading 212 app as usual, and you can see here that the portfolio right now has a total value of 849 euros. Our return so far is 1%, which is not bad, not perfect, not great. Considering the high inflation scenario that we're living at the moment, I am still losing purchasing power, but I'm still 1% up, so I'm losing 1% less than everyone else. But as you might remember from previous episode, there was months here where my portfolio was super negative. Actually, this is one of the few times that it's positive, but as always, I have a really long-term horizon on this portfolio, and in a couple of years, in a couple of decades, I can rewatch these videos and understand what I was doing. You can see here in the time frame, it looks like a really nice line, everything is growing, but this always depends on the perspective. You can see here me changing 3 months. You can see here in this past month, if you just look this historical performance, you can see that this almost looks like a wild emotional roller coaster. So imagine if I had a lot of my money invested in this portfolio, I would be stressed. Like sometimes it was here, sometimes it was down. So just remember, investing is all about making your life better, and if you're emotionally too attached to this, it's not going to be healthy for you. It's just going to add another layer of stress that you really don't want to do. So always invest money that you can afford to lose. Last year, for example, I was investing 60 euros per month. At the end of the year I was with 600. This year I'm trying to invest 120 per month, which is a big chunk. I don't know if I'll be able to commit to this amount, but we will see. So just stick around in these channels, so if you can watch this if this interests you anyway. I'm just doing this as a video log, but most of my videos here on the YouTube channel are like a time capsule thing. So as you can see here, we have Alibaba is up 25% its position, Google is down 9%, Amazon is up, Farfetch is down, Intel is down, the S&P 500 ETF is down, the information technology ETF is up barely, it's almost like neutral, 0.41, JD.com is up, Meta is up. Normally it's always down, Meta, but it's been performing a lot. Pinduoduo it's the best performance here on the portfolio, but then again it's only 4 euros in 800, so that's more or less, let me actually see the distribution, it's like 0.50% of your portfolio. Remember, you can have some positions that are more risky, others that are more conservative or safer. In that perspective, there's not such thing as a safe investment, there's always risk involved. But as you can see here, the bulk of my portfolio, as usual, it's in ETFs. So 32% is in the ETF that's mimicking the S&P 500, so the biggest 500 companies listed in the stock exchange. And the second place, we have a more focused ETF, so it's the information technology sector. Most of these ETF is composed like by Apple, Microsoft, because they are such large companies that they take a really huge bulk of it. That's why I don't invest in them individually in this portfolio. Then we have Google with 12%, which is down, so this affects the overall performance of my portfolio, because if Pinduoduo went to 0.50% in my portfolio is not that much, but if Google went to zero by some apparent reason, I would lose more or less 12% of my current investment. So if my entire net worth was this, I would lose a tenth of it basically. So Meta Platforms and Intel, you can see here the distribution. We are actually kind of low on Chinese stocks now that I look at it. 3.94 so 4% basically to Taiwan Semiconductors, 3.3% for Tencent, Alibaba, and JD.com. So in this month, I haven't had a lot of time to research about companies, so the most of it is going to the ETFs, even though I said I wanted to have a more focused portfolio. The times are quite uncertain. I'm not sure if I want to go all in individual stocks. Of course, a portion of it will go to individual stocks, but when I don't have that time, it's just dollar cost average. At the end of a few years, decades, I hope it will average down, and we'll see like the performance. So I already built the pie for this month. So you can see here the historical of all the months. So we started in the January of 2022. So if I had invested all this money in January of 2022, I would be losing 12% on that distribution. Only if had invested in March, I would be up 7%. The rest of the months is negative. If I had invested all my money in November of 2022, I'll be up 18%. So it's really hard to time the market. So there will be times where you'll be investing at the bottom. There will be times you'll be investing at the top. At the end of the day, this is a long-term portfolio, so I'm not really that worried. So just stay rational, don't get over emotional on it. And I already created the pie before I created this video, because I want these videos to keep them short as always, and I've been running low on time lately, but I committed to this series and I intend to continue this. And I know that a few friends of mine like to watch this anyway, and this works as a reminder for them. So yeah, thank you all for watching, by the way. So you can see here that I'm gonna have this distribution. I'm gonna have 30% for the S&P 500 ETF. I'm gonna have another 30% for that more focused ETF, because I'm still young, I can afford to take a bit more risk. 15% for Google, and this might be a bit controversial, but I still believe in Google, with their recent flop in their AI presentation. Microsoft was way better, but then again, I'm not betting on like a team. In the S&P 500 information technology sector ETF, there's also a bunch of Microsoft there, so I'm not really worried. Like, you can invest in both competitors. Not when you invest into a stock, you're not necessarily marrying to that company, so you can always sell, or you can always invest in other competitors, and if the narrative change, you can adjust. Even though Google is with a bit of negative sentiment, I still believe in the long term of this company, and it's down in my portfolio like roughly 10%, and I'm going to invest another 15%, because this is the ideal time for me to invest when companies are trading low. So Alibaba is gonna have a 13% allocation, and Taiwan Semiconductors is going to have a 12%. So I'm exposing myself to 25% to the Chinese market, so that I can push it a bit higher in the overall portfolio. So you can see here, this is the distribution. I'm gonna invest, and like I said, it's going to be 120 euros. Oops. Let me see if I can do this correctly. Okay, so 18 euros are going to Google, 14.40 are going to Taiwan Semiconductors, 15.60 Alibaba, and then 36 for each of the ETFs. So confirm buy. And yeah, some of them will not execute, because I'm doing this on my my lunch break, so they will only execute on the afternoon. And yeah, that's it for today. I will show here the portfolio, the overall portfolio, when all the orders have executed. Thank you all for watching, and I'll see you in the next time. Bye.